You've poured your heart and soul into your LLC. But are you leaving money on the table when it comes to taxes?
Oh, that's a question I hear a lot, especially from mid-career business owners, folks who've been at it for a while.
And that's exactly what we're diving into today on this FBS podcast episode. Deep dive, rather. We're going to explore why an LLC owner might choose to be taxed as an S Corp instead.
Yeah, there's some serious tax savings potential there.
But before we get ahead of ourselves, got to put on the disclaimer hat.
Of course, this is for informational purposes only, not legal or financial advice, so always best to chat with a qualified pro for your specific situation.
Always good advice. All right, let's back up a sec. Most LLC owners are pretty familiar with how LLCs are usually taxed, right?
Right. Single-member LLCs are typically what we call disregarded entities, meaning your business income and expenses are just treated as part of your personal taxes for the IRS. It's like the LLC doesn't even exist as a separate thing, and then for multi-member LLCs, they're usually treated as partnerships. Yeah. So income and losses pass through to each member.
Okay, so where does this whole S Corp election come in? It's like picking a different path for how the IRS sees your business.
Exactly. An LLC can choose to be taxed as an S Corp instead. But there are a few rules, like you can't have more than 100 shareholders, got to be U.S. citizens or residents, and you can only have one class of stock.
Got it. So it's not going to be the right fit for everyone. But why would someone go to the trouble? What's the big advantage?
The main reason is the potential for self-employment tax savings. See, with a regular LLC, you're paying self-employment taxes on all the profits. But with an S Corp, you can split your income. Part of it's salary, the rest is profit distributions.
So it's like you're paying yourself a salary as an employee, but also getting a share of the profits like an owner.
You got it. And that's where those tax savings come in, because you only pay self-employment taxes on the salary portion, not the profit distributions.
That could add up to some real money. Let's make this concrete, though. We've got a great case study about a guy named Allgood who runs a sawmill. His story really brings this to life.
Yeah, Allgood's a perfect example. His business was doing well, bringing in a good profit, but he was paying the full 15.3% self-employment tax on everything. His accountant suggested he look into the S Corp option.
What happened next? Did he actually go for it?
He did. They figured out a reasonable salary for him in the business, about $40,000 based on what others in the industry were making. That left $60,000 of his $100,000 profit to be distributed as profit, not subject to self-employment tax.
So he's still paying those taxes on the salary portion, but what did that actually do to his overall tax bill?
Instead of paying $15,300 in self-employment taxes, he ended up paying them on just the $40,000 salary. That's almost $9,200 saved.
Well, that's a serious chunk of change. What does Allgood do with all that extra cash?
Smart guy reinvested it right back into the business.
Yeah.
Upgraded equipment, expanded his drawing capacity, all thanks to getting strategic with his tax structure.
Makes a pretty strong case for at least exploring the S Corp option. I'm guessing it's not quite as easy as snapping your fingers, though. What are some of the things someone needs to do to make this happen?
You're right, there are a few steps. First, you got to file Form 2E553 with the IRS to elect S Corp status.
Okay, and I'm assuming there's a little more to it than just filling out a form.
Definitely. Once you're classified as an S Corp, you got to set up a payroll system to handle paying yourself that salary. And of course, you're responsible for withholding taxes and making those quarterly payments.
Sounds like a bit more paperwork than just sticking with the LLC.
Mm-hmm.
What else should people be aware of?
That reasonable salary we talked about earlier, the IRS is pretty serious about making sure you're not taking a super low salary just to dodge those payroll taxes.
Makes sense. Got to keep things fair. How do you go about figuring out what a reasonable salary is, though?
That's where things can get a little tricky. Well, the IRS considers a lot of things. Industry standards for similar positions, what your experience is, your responsibilities in the business, the time you put in, even the company's overall profitability. There's no one-size-fits-all formula. It just has to be something you can back up.
It sounds like having a good tax pro on your team is pretty important here. They can help you figure all that out and make sure you're not going to raise any eyebrows at the IRS.
Exactly. They can help you analyze your situation, look at comparable salaries, and build a solid case for the salary you choose.
Smart move. So besides the salary and payroll, what other admin stuff comes along with being an S Corp?
Well, you'll have to file a separate corporate tax return for your S Corp. That's Form 1120S. It's how the IRS keeps track of your business income and expenses separate from your personal finances.
So a little more involved than just tacking on a Schedule C to your personal taxes. What about those quarterly taxes we hear so much about?
Right, as an S Corp with employees, you're considered an employee. Now you'll need to file those quarterly payroll tax returns that covers the federal income tax withheld from your salary, plus Social Security and Medicare taxes.
Definitely sounds like there's more to keep track of compared to a regular LLC. Any other potential downsides to think about before making the leap to S Corp land?
One thing to keep in mind is state taxes. Those can be a whole other ballgame. Some states automatically recognize the federal S Corp election, but others might have their own separate filing requirements.
Another reason to have that tax pro in your corner. They can help you navigate all those state-specific rules.
For sure. And it's important to remember that S Corp status isn't a magic solution for every business out there.
Yeah.
Sometimes it just might not be the most advantageous structure.
Right. It's not a one-size-fits-all deal. When might it not be the best fit?
If you're thinking about going public with your company or seeking venture capital funding, the S Corp structure might not be ideal because of those limits on the number and types of shareholders. And if your business isn't making much profit, yet the self-employment tax savings might not be enough to outweigh the extra administrative work.
Makes sense. So it really comes down to weighing the pros and cons based on your own business goals and circumstances, and that's where getting expert advice is key.
Exactly. A qualified tax professional can help you analyze your options, project your tax liability under different scenarios, and make sure you're making the best strategic decision for the future of your business.
This has been a really eye-opening look at S Corp taxation for LLCs. It seems like the potential benefits can be pretty significant, especially for someone like Allgood, who's hit their stride and wants to reinvest those profits for growth. But there's definitely some stuff to consider.
I agree. The main takeaway here is that knowledge is power. The more you understand how S Corp taxation works, the better equipped you are to make an informed decision about your business.
We've covered the potential tax perks, the steps to make the switch, the whole reasonable salary calculation. But before we wrap up, I'm curious about something you mentioned, that tax laws are constantly evolving. What can business owners do to stay ahead of the curve and make sure they're always in compliance?
You're right about that. Staying up to date is so important. One of the best things you can do is subscribe to some reputable tax and business publications or newsletters. Those will keep you in the loop on any major changes to legislation or IRS guidelines.
So like getting the SparkNotes version of all those complicated tax codes, I like it.
Exactly. And don't underestimate the power of networking and professional development. Going to industry conferences or workshops can give you some great insights and help you connect with other business owners who are facing similar tax challenges.
It's like that saying, none of us is as smart as all of us. Sharing those experiences and knowledge can be really helpful.
Absolutely. And speaking of knowledge, it's worth remembering that we've really just scratched the surface of S Corp taxation here. It's a complex topic with lots of little details, and the best way to make sure you're making the right choices for your specific business is to talk to a qualified tax professional.
We've definitely been hammering that point home this whole episode. They can give you personalized advice and help you navigate all the complicated stuff.
Exactly. It's like having a trusted co-pilot on your business journey. They can help you map out the route, avoid any turbulence, and get you where you need to go safely and efficiently.
Well said. This deep dive has been incredibly helpful in clearing up some of the confusion around S Corp taxation for LLC owners. We've learned about the potential tax benefits, the steps involved in making the switch, the importance of figuring out that reasonable salary, and all the ongoing administrative stuff that comes with it.
And most importantly, we've highlighted the need to approach this decision strategically and with expert guidance.
And it all goes back to that FBS mission of giving mid-career professionals like you the knowledge you need to make smart decisions for your businesses.
We're dedicated to providing you with the tools and resources you need to navigate the ups and downs of the business world, whether it's tax strategies, financial planning, or leadership development.
So as we wrap up this deep dive, let's leave our listeners with one final thought-provoking question. Could S Corp taxation be the right move for your LLC? What factors would you consider in making that decision?
We encourage you to take what you've learned from this episode, talk to a qualified professional, and make a decision that makes sense for your unique business goals and aspirations.
And remember, the FBS podcast is here to support you every step of the way. Thanks for tuning in.
Hey, this is Steve Bick with the Forest Business School. Thanks for listening to the FBS podcast, and I hope you will subscribe. The truth is, these deep dives barely scratch the surface of some of the topics we cover in the Forest Business School programs, and the podcast is a way of reaching a wider audience. Check out my website at vtfbs.com for more information. Reach out if you want to talk about one of the FBS programs or have custom training or project needs that you'd like to discuss. Again, thanks for listening to the FBS podcast.